Hey everyone, welcome back to the channel, where we break down the biggest stories in finance, tech, and the stock market, so you can stay ahead of the curve. Today's video is packed with crucial updates, from the latest economic indicators to major corporate earnings and dramatic stock moves, including Spotify's unexpected plunge, Tesla's momentum shift, and what the Dow Jones current rally really means. Let's dive right in. Tuesday morning opened with a mixed bag on Wall Street. The Dow Jones Industrial Average climbed 0.3%, while the S&P 500 slipped 0.2%, and the Nasdaq Composite dropped 0.4%. That tells us something important. Traditional blue chips are showing resilience, while tech stocks are stumbling again. Meanwhile, the 10-year Treasury yield edged up to 4.2%, signaling a modest rise in borrowing costs. On the commodities front, oil prices fell slightly, with West Texas Intermediate crude settling near $60.90 per barrel, a sign of potentially cooling inflation pressure in energy markets. Let's talk tech. Tesla shares slid 1.4% Tuesday, snapping a multi-day rally. The electric vehicle giant, led by Elon Musk, had just climbed above its 50-day moving average, but now it's testing the more formidable 200-day line, a classic resistance level that traders are watching closely. Tesla is still down nearly 42% from its all-time high of $488.54 back in December 2021. So this could be a make-or-break moment. Nvidia, the AI juggernaut, slipped 0.3%, ending a 4-day win streak. The stock hit resistance near its 10-week line, suggesting the rally may be stalling. For investors betting big on AI, Nvidia's hesitation is something to keep on the radar. Now to one of the day's biggest shockers, Spotify. Despite announcing better than expected subscriber growth for Q1, the music streaming giant missed badly on both earnings and revenue. The result? A jaw-dropping 7% drop in share price. The stock is threatening to trigger the 7% loss rule from a 621 point to buy point, a major red flag for momentum investors. While Spotify's user growth remains promising, profitability continues to haunt the company, especially in this rising rate environment where cash flow is king. Investors also digested a slew of economic reports Tuesday. First up, the Case-Shiller Index, which showed home prices rising 0.4% in February, meeting expectations. Year over year, prices are up 4.5%, just under the 4.7% forecast. The FHFA Home Price Index, however, disappointed with just a 0.1% rise, well below the expected 0.3%. The Consumer Confidence Index, released by the Conference Board, was due at 10 a.m., with a projected decline from 92.9 in March to 87.5 in April. Add to that the JOLTS report, which forecasts job openings to dip further to 7.464 million. And you've got a picture of a cooling labor market and waning consumer optimism. Let's go rapid fire through today's major earnings movers. AstraZeneca, AZN, up 0.3%. A solid morning for the pharma giant. Coca-Cola Co., down 1%. Investors may be unimpressed with earnings. General Motors GM, down nearly 3%, as headwinds in auto sales continue. Honeywell Home surged more than 4% on strong results, easily the winner among industrials today. PayPal PYPL climbed 1.3%, indicating a rebound in digital payments. Pfizer PFE, down 0.5%, still reeling from declining vaccine revenue. One breakout story here at Tim's and Hers Health Hims, skyrocketing 28% after a deal with Novo Nordisk to distribute Wegovy, the blockbuster weight loss drug. This marks a massive win in the telehealth space. Looking back at Monday, the Dow Jones rallied 0.3%, adding 114 points, while the S&P 500 edged higher, and the Nasdaq barely broke even. Tech weakness seems to be continuing into Tuesday, with volatility in full swing. The team at IBD is advising caution. Their big picture column recommends investors keep exposure limited and stay selective. So where should you be looking next? According to IBD's market surge platform, here are 4 key stocks, either breaking out or nearing buy points. Company, ticker, buy point, pattern, Boeing, BA. 184.40, double bottom. Spotify, spot. 621.20, double bottom. 288.57, double bottom. Mercadolaba, Melli. 2,202.00, double bottom. CrowdStrike CRWD is also getting attention as it adds to gains past its 400.0 to buy points, and Guidewire GWLE nearing a breakout at 201. Among the magnificent 7 megacap stocks, politics is now part of the narrative. Amazon fell 2% Tuesday morning after the White House criticized the company's decision to publicly display tariff costs on products. Calling it a hostile and political act, Amazon is expected to report earnings Thursday. Apple slipped 0.4%. Though it's trading at its highest level since early April, earnings dropped Thursday after the bell. Microsoft is also in the spotlight with earnings due Wednesday. Its stock is trading above its 50-day line for the first time since January. A bullish technical sign. With so many mixed signals, strong gains in industrials, but weakness in tech and consumer sentiment, investors are facing a classic whipsaw market. The smart play right now is to watch key resistance levels, stick to confirmed breakouts, and follow stocks with rising relative strength. Watch lists should include growth leaders like CrowdStrike, Mercadolaba, and Penumbra. Use IBD tools like IBD 50 and Big Cap 20 to discover emerging opportunities before they go mainstream. If you're looking to level up your investing toolkit, make sure to check out the links in the description for 10 powerful Amazon products that can boost your trading game, from charting books to stock screeners and productivity gear. And don't forget, if you enjoyed this breakdown, hit that like button, subscribe, and ring the bell so you never miss a market update.